St. Louis apartment market is starting to show some signs of life as apartment demand exploded in third quarter 2012, reaching a decade high. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your St. Louis update. The St. Louis apartment market has pretty much just limped along over these past few years, not seeing the boom that most of the nation's apartment sector has enjoyed, but that may have changed a little bit with a big third quarter performance. Huge demand for apartments, 2,748 units absorbed, the Metro's best performance in more than 10 years. It was the fifth largest absorption number nationally in Q3 and the largest in the Midwest region. Of course, St. Louis had tons of vacant units to absorb, so there was plenty of demand potential, and occupancy as a result surged 170 basis points in third quarter to 94.3%, the best rate St. Louis has seen in a decade. Occupancy hadn't reached even 94% here since 2007. But that still puts St. Louis well below the Midwest and U.S. norms, which is almost always the case here. Of the 19 Midwest markets, St. Louis topped only Wichita, Kansas City, and Indianapolis in Q3. The Midwest average was 96%. And let's break the occupancy numbers down a bit further. Every submarket and every product age group notched growth in third quarter. The best submarket jumps came in Central West End Forest Park, in the St. Clair, Madison counties area, St. Louis City, and in North St. Louis County. So what's driving all of this demand for apartments? Well, if the government job numbers are to be believed, it's not the local economy. The Bureau of Labor Statistics shows just 1,900 jobs added in the past year. But there's good reason to believe that number is probably understated. Not only is apartment demand been very strong here, but home sales are starting to show good momentum as well. Home sales are up 17.2% year over year through September. And with that much total housing demand, you'd expect to see better job growth numbers. And it's probably a good clue that the job growth numbers are going to be revised up once the BLS does its revisions. But even with that strong demand for apartments, rent growth levels have been pretty modest. Pretty much across the board. Overall rent growth as of Q3 2012 measured just 1.5%. That's the Metro's smallest year-over-year increase in 7 quarters, and it was the third lowest hike in the Midwest, ahead of just Toledo and Omaha. Not a ton of variation by submarket. Only St. Louis City notched a hike of more than 2.5% in the past year, and among the product age groups, it's the same story. All 5 come in at 2.3% or less annual rent growth. And going forward, the job market should continue to pick up and new apartment supply will be minimal. The biggest headwind will probably be the for-sale housing market. Homes are cheap in St. Louis, so the loss of renters will likely pick up some. But total housing demand should be strong enough for occupancy to continue to climb a little bit and for rent growth levels to gain a little bit of steam. We're expecting year-over-year rent growth to measure 3.6% for the St. Louis metro area. And that wraps up for St. Louis, so until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.